Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, an equity strategist for ADCB. With an objective to empower you with investment insights, on this program we discuss various perspectives shaping the global investment landscape. In this week's episode, we touch on the outlook for Indian equities, contrasting the near term with the long term. Indian equity market has been one of the very few bright spots in the emerging market space this year. Just for the context, on a year-to-date basis as of December 10th, total return on MSCI India index stood at 25% in US dollar terms compared with a negative return of 2% on MSCI Emerging Markets Index. Indian equities performed in line with the US equities but significantly outperformed global equity benchmarks. Against this backdrop, the key question worth asking is if the strong performance of Indian equities can continue. Especially given the 5% drop over the past month, prospects for outperformance of Indian equities are worth a reassessment. To state it upfront, we modestly overweight Indian equities alongside other Asian markets. Our conviction on Indian equities is strong for the long term, but not so strong for the near term. Especially for 2022, India ranks relatively low on our list of preferred Asian markets. We think Japanese, ASEAN, Chinese and Hong Kong stocks have better prospects than Indian equities over the next 12 months. Let's start at the macro picture and dig deeper into the outlook for Indian equities. According to the International Monetary Fund, India's gross domestic product is expected to grow by 9.5% in the fiscal year 2021-2022 after having shrunk by circa 7.3% during the previous year. For the fiscal year 2022-2023, growth is expected to moderate to circa 8.5%. In fact, for the quarter ended September 2021, India's gross domestic product grew 8.4% year over year and returned to its pre-pandemic level. India's broad range of fiscal, monetary and health responses to the crisis supported its recovery and along with economic reforms are helping to mitigate a longer lasting adverse impact of the crisis. Of course, recent weeks also saw the government repeal the 3 agricultural laws following protests by farmers for over a year. On the monetary policy, citing the prospects for the inflation to fall in the future, the Reserve Bank of India, in its recent Monetary Policy Committee meeting, struck a dovish tone. Adding to this relatively strong macro picture were other external and internal dynamics that helped Indian equity market performance. Firstly, as Asian markets, including the Chinese equities, struggled to perform this year, some of the emerging market and Asia-focused money made its way into India as a plausible alternative. Looking ahead, should other Asian markets, like China for example, start to perform well, money could quickly rotate back. Also, a strong profit margin expansion for Indian corporates helped in valuation re-rating of Indian equities over the past year. For the context, according to the consensus estimates by the Institutional Brokers Estimate System IBES, the 12-month forward price to earnings ratio of MSCI India is currently 22 times. This is 79% higher compared with the valuation level for MSCI Emerging Market Index. Granted, Indian equities always trade at rich valuations compared to their emerging market peers. Yet the average valuation premium over the past 5 years was only 53% compared to the 79% premium now. Whilst valuations are not price catalysts, higher valuations often point to lower returns in the future. Higher valuations also increase vulnerabilities. Although we don't expect this, a compression in profit margins could impact valuations quite negatively. Other risks which Indian equities face alongside other emerging markets are the conduct of the US monetary policy and the spread of the new COVID-19 variants. Taking all these into consideration, we're slightly cautious on Indian equities over the near term. However, we do maintain a modest overweight on Indian equities for the longer term, where we see the attractions of strong demographics, relatively higher growth potential, a developing startup ecosystem, and improving export sector. Thank you for listening. We hope you liked this podcast. If you did, please do share it with a friend or a colleague. If you would like to have more information on what was discussed on this podcast, or if you have a specific question relating to Indian equities, please reach out to your relationship manager at ADCB. My name is Kishore Muktinutalapati. I'll be back next week with more global investment insights.